Hi guys, and welcome back to FutureFunded. Today I'm going to be going through the key elements of psychology that allowed me to pass my prop firm accounts and become a consistently profitable trader. Remember, trading is 90% mindset, 10% technicals, so let's get straight into it. Okay, so the first thing that we need to understand when it comes to how to analyze yourself and your trading is firstly, how to be self-aware. Trading is not about technicals. Futures, FX, doesn't matter. It's all about one thing: how you react. How you react to the markets, how you react to yourself. What are your flaws? What are your good habits? What are your bad habits? And how we can take away the bad habits and keep pushing the good ones. In order to do that, you need to understand 4 key components. These are the key components that allowed me to become consistently profitable with FutureFunded themselves and actually start passing accounts. Now, the first one is this: every moment is unique. What do you think I mean by that? What I mean by that is there will never be 2 trades that look the same. Every single trader, even go and ask yourself, you have a mental picture in your head of exactly what your perfect setup looks like. But the reality of the situation is that very setup was only applicable on the day that you actually took it. Why? Because there are 1,000,001 different variables, i.e. buyers and sellers, who were aligned that day that allowed that trade to play out that you liked so much. But if you then try and translate that into today's trade and try and look for the same mental picture in your head of the trade you took 2 weeks ago, you're never going to see the same thing. This will allow you to hesitate. This will push you to not take the trade in general, or you might take it too early, too late, so forth and so on. So the most important thing that I learned was to be present. What does that mean? It means make yourself available to the market at the time that you are trading. That means that whilst I am trading, I am only focusing on what is happening right now. I don't care what happened yesterday. I don't care what's likely to happen this afternoon or this evening. All I care about is how is the market looking right this second? Is there a setup right now? And if, not when, but if price gets to this level or does this thing, I will do this. Be reactive. Don't think you know what's going to happen, because let's face it, you don't. You have no idea where the market's going to go. You can try and predict it all you want. The reality of the situation is the market will do what it wants, and the only ones who can predict it are the institutions who are moving it. We're not one of them. So we have to be reactive, and we have to focus on what the market is presenting itself right now. If we are not in the mindset or the frame, or at least if we're not in the mindset to be able to be present to every opportunity that we see that defines our edge, we will end up not taking many trades, and the ones that we do are the ones that we want to be absolutely perfect, and they never normally are, because every moment is unique and price does and moves in mysterious ways. So then we just end up taking trades that we're not comfortable with. So every moment is unique. As soon as I understood that, and as soon as I understood that I have to make myself present to every single opportunity that defines my edge, that's when it became easier. Secondly, anything can happen. Probably the most simplest, yet the most difficult for most people to understand. Anything can happen at any time. Every single time that you take a trade, or you look at a setup, or you do an analysis, you plan for all of the things that you think will happen. But 9 times out of 10, the very thing that does happen is the very thing that you didn't plan for. Why is that? Because you're only focused on the things that you want to happen, not the things that can happen. Anything can happen in the markets. The markets can go in any which direction it wants at any time. You might say, oh, the market's not going to spike up and down in the next 10 minutes, and then it spikes up and down, and you have no idea why. Well, the reason why is because anything can happen, and the market does what it wants, and you can't control it. So you have to prepare yourself for all eventualities, which means you have to look at the downside. You cannot go into a trade only focusing on the upside and forgetting and neglecting the possibility of what it could look like if you lose. Because then what happens is when you do lose, you then go into a state of shock, and then you start asking, or at least blaming, the markets as to why the markets did that to you, and then you're more likely to go into a revenge state of mind. where you start taking 2, 3, 4 trades and then you just go off on your tangent. This happened to me for many years. But the moment that I started to look at the market from a probabilistic view of any outcome is possible, and I need to focus on being present to my edge regardless of the outcome, that's when I was able to just stick to 1 trade a day and go from there. Thirdly, I already spoke about this, but you don't know what's going to happen next. By far the most crucial out of everything. We as traders believe that our knowledge means that we're better traders. We think that we can predict markets just because we've studied charts for the last 5 hours. We think we know what's going to happen next purely because we've stayed up all night backtesting it. We don't. There is no one on this planet that can tell me, retail trader wise, I'm talking not an institutional trader, but a retail trader. There's not one person that can tell me what's going to happen next and be guaranteed, right? We don't know. So if we don't know what's going to happen next, we must think on a long-term perspective. We must think about the next 20 trades, not the next trade. Because if we can't guarantee what's going to happen on the next trade, then we have to look at a strategy that makes us money over a series of trades, not one. That is the key point. Most traders will put all of their time, effort, and energy into one singular trade on a Monday morning because they spent the whole weekend doing all their back testing, doing all their, researching, creating all the knowledge and this, that, and the other. And then they look for the perfect setup, and guess what? It doesn't work. Why doesn't it work? Because even your best setup doesn't work sometimes. That's the market. And then they go into a state of shock. And then they start asking themselves, why didn't it work? Well, it couldn't have been me. It had to be the market. So now I have to change my strategy. Do you see how much of a vicious circle this is? All right. The most common thing that traders do is they change strategy. They only change strategy because they don't understand this concept. They don't understand the concept of you don't know what's going to happen next. Your strategy, every single retail trader's strategy, and I will repeat, every single retail trader's strategy is not designed to guarantee a win on their next trade. It is designed to be profitable over a series of trades. 10, 15, 20, 25, 30, however you measure it. If you measure it based upon the month, if you measure it based upon the quarter or based upon the 6 months or the year, then that's how you measure it. But then it's one thing saying you're going to do that and actually doing it. The best traders in the world understand the long game. When they say think in probabilities, they mean measure your strategy based upon the long term. Do not measure your strategy based upon one trade, because you cannot get not even an accurate measurement. It's impossible to get a measurement off of one trade because you can't guarantee you're going to win on that trade. All right. So you don't know what's going to happen next. You don't actually need to know. All you need to do is focus every single day on sticking to your plan and making sure that you're executing your plan, making sure that you are consistent leading up to the point where you get on the charts. That means you are sticking to the same routine that you would normally do on your winning days, and you are sticking to the same post-trade routine to allow you and to ensure that you don't revenge trade, overtrade, or go into a state of depression and this, that, and the other, which is very common for most traders. All right, a lot of the times when people take a trade and they lose, if they don't take a trade for the rest of the day, sometimes it can really affect them. I know it did me many years ago. So you have to teach yourself and techniques. You have to teach yourself ways to get out of that. All right. And there are techniques you can put in place to be able to manage that. You can't get rid of it, but you can manage it. And that's one of the most crucial parts. All right. And lastly, if you know that every moment is unique, if you know anything can happen and you don't know what's going to happen next, then every single time that you step on the charts, you have to step on the charts with a probabilistic view. A probabilistic view means that I'm giving myself a higher probability of this trade working than not, but whatever the outcome, I pat myself on the back I say well done, and I have a positive winning attitude, and I come back again tomorrow and I do the same thing. You just have to learn how to survive. Trading is not about big wins. It's about being able and being a master at surviving day in, day out, especially when you're going through those losing trades, because you can't get to that win if you don't know how to manage those, let's say, 2 to 3 days worth of losing trades. If you go through those 3 days of losing trades, but you've instead taken 6 or 7 trades, then you're out of the game. Whereas if I go through 3 days of losing trades, I'm just down 3%. And then if I go through a winning trade, which might be 4 or 5%, well, guess what? I'm now up 2% for whatever the rest of the week. Okay, it's a completely different mindset, but you can only do that if you understand what to do and how to manage yourself when you go through the bad times. Everyone's a very good trader when they go through winning streaks, but no one's a good trader when they go through losing streaks. If you learn and if you develop the skill set, and if you focus every element of your trading on how I can manage and become an expert at losing, the rest will simply take care of itself. If you don't, you'll continue to go around in that circle. In that case, I wish you luck. I've been there, I've done it. It ain't pretty. All right, but guys, I hope that helps. I hope you found that useful. I hope you can take some value from that and actually implement that into your own trading. It's one of the very key elements that I had to work on for quite a while to ensure that I could become consistent, but it is the most crucial element of trading. Remember, trading is 10% technicals. Everyone can learn trading within a month and a half. That's the easy bit. The thing that takes years is training your brain, fine-tuning your brain, and developing the skill set so that you can close that psychological gap between what you agree with and what your characteristic is. What you agree with is, yeah, you might agree every moment is unique and anything can happen, but actually making that a characteristic is the thing that you need to work on every single day. It's a consistent thing and it doesn't stop. So you have to make that decision with yourself. So I hope you found that useful, and I'll see you on the next video, guys. So there you go, guys. That is my step-by-step breakdown of the very things that I had to implement over years to be able to reach consistency before I could even become profitable. I hope that helped, and like always, make sure to like, comment and subscribe if you want more videos. Make sure to go to FutureFunded, get your challenge and start implementing everything I've said. Until then, I'll see you next time.